Hey everyone, this is Chris. Welcome back to the channel, and this is your daily Uncut news. So we got to start with this. Abandon all hope. It seems that the markets are poised to go to new lows this year, and it's funny because there's a lot of people saying, "Hey everyone, this is the lows back in June, and time to be buying up stuff." I've been warning you guys about these kind of things. Just check out the numbers for yourself. Get a general sense of where we're going, where we are, and that'll certainly help you opposed to getting caught up in this craziness of people saying that we're going to be bull runs from here. It is hard to be bullish if you pay attention to where we are in the numbers. And one of the reasons why I say that, if you take a look at this, the banks are actually preparing for a lot of bad loans coming in. In fact, they're saying maybe 4 billion is what they're preparing. We'll see. One of the things that is actually quite interesting is they got their earnings coming up. Someone was mentioning in the comments earlier sort of how our banks calculate earnings and how much money are they making, etc. I'll read this, and this will hopefully help you kind of get a sense of where this is and what to look for. So this is Goldman and Morgan Stanley, which derive a greater share of earnings from investment banking, right, are expected to see revenues fall because of slower deal-making activity. So basically, like, Goldman and Morgan Stanley, these kind of things, they bring companies IPO, they do mergers and acquisitions, that kind of stuff, and they get commissions off these things, right? Essentially, they want deals to be made, and the money has definitely been drying up this past year. I'm sure you guys know the SPAC market dried up as well. You can read more. Traditional investment banking is very weak. Equity capital markets are down fairly significantly. The declines will sharpen the focus on banks' management of expenses and headcount. So when you're looking at the earnings of banks, stuff like that, you want to think about, okay, how much money are they spending in the overall admin expenses, and how many people are they firing? They've already announced layoffs, and we'll see if there's more coming soon. It is a tough business to be in. Essentially, when everyone is making money, we're all going up. Everyone's going out to the parties and then Wall Street. And then when something's go down, suddenly no one's your friend, and you're clinging to a lifeboat. This is sort of how that market works. It's happened time and time again. And it's kind of a boom or bust sort of situation. And the last you can see here, banks, stock, and bond trading divisions on the back of volatile markets are expected to continue the strong performance in the third quarter. So certainly, there's some money to be made, but not all of their activities are solid. And again, we'll see what they report coming up soon. I think that's next week when the banks start reporting. This is the chart of, it's really interesting, of sort of how they're preparing for bad loans, essentially. Now you can see in 2020, quarter two, they actually had a bunch of cash on reserve. We're worrying, quite worrisome, but basically what happened is that the Federal Reserve printed a ton of money and sort of essentially bailed everyone out, right? This time around, they don't have much of a cash reserves, which is, probably, I'm not sure. I'm just telling you that I'm not sure, because I don't think the Fed is going to bail anyone out. And so the problem would be is, okay, what if there's like massive amounts of bad loans? What would happen? Because they don't have as much cash as they did before. So keep an eye on these things. I think it is something to discuss, and we'll see. Part of what's going on is, I'm sure you guys know, the dollar is really, really strong, and the types of companies that make money overseas are going to see their profits decrease, mostly because, right, with the currencies weak overseas, you have a ton of sales overseas, but the foreign currency isn't worth that much, right? You're just not netting that many dollars. One of the things that's also happening too, so to try to, make up for this, is you can raise prices. And one of the things that this does is this push more pressure on the consumers, right? So I'm sure you guys know, you go to the store, things cost more money. You're like, oh my God, everything costs more. And so there's only so much you can put out. And this is sort of something that we've been seeing trending as well, is that these sort of lower income brackets are putting more and more on their credit card and equity, these kind of things, or they've having a difficulty with if they have adjustable rate mortgages, right? So those kind of things are putting a lot of pressure. Essentially, what's going on though is that businesses, once they raise prices, they're not coming back down. You can read this description here. Prices are sticky. Economists like to say once they go up, customers get used to it, and they rarely come down quickly. If companies' costs then fall, they can pass along even a little of the savings and keep the rest. Customers get a bit of a break, and margins still widen. So the basic gist of it is, like, once prices go up, customers get used to it, and they're just used to paying that amount, and it's difficult to go back down. They may go back down a little, right? But essentially what companies try to do is they raise the revenue, raise their essentially prices up, right, raise their revenues, and ultimately hoping in the future that they can raise their profits, and then stocks will start to go up, right? So that's why I always show you guys earnings and stuff like that, because you want to pay attention to how much companies actually earning. Revenues can be a bit deceiving, right? Total sales can be a bit deceiving when your expenses are also going up. Job market is slowing, so that is certainly signs is good. However, I'll say, however, when we got that last unemployment thing, it was different than the number that we had expected. Essentially, I think before unemployment was a read of 3.7, it dropped back down to 3.5. This was just saying that jobs are slowing, but you're dealing with a bunch of different indicators, right? So the unemployment rate is essentially a lagging indicator, meaning that the data is a little bit old. We do know that many companies are either freezing or laying off, and so you get this kind of conflict of data. I guess is the right way to say, to see which is accurate. But it certainly seems that the Fed, right, looks at these sort of lagging indicators, and the idea is that they're watching, like, okay, where is unemployment, and what are we doing with interest rate hikes? So basically, as I've showed you guys, and please watch other videos that I've made on this subject, but I do expect unemployment to go up. I was been saying, the Fed was saying maybe 4.5, something like that. I think it could be maybe 5%. It could get really ugly. It could go up as high as 10%. There is a possibility. We do live in a world where you just don't know for sure. But I do know with interest rates going up, most likely unemployment will go up, and that's sort of what the Fed is thinking as well. I'm sure you guys know one of the top stories, and unfortunately, a very, very unfortunate story is seems like the war in Ukraine is escalating. Now, there was that bridge attack. I still don't know exactly what the cause of it is or who is responsible. I just don't know. I've been reading through lots of stuff. Russia, however, is blaming Ukraine. I haven't seen anywhere where Ukraine has claimed that they've done the attack, so I'd like to hear you guys' opinion on that. I just haven't seen it anywhere. But basically, in response, Russia has been launching missiles, and I think it was like 10 different cities. It is there's nothing we can say positive. This is a horrific thing because from my understanding, when you're just launching missiles to just various cities, I don't see any indication. I've been reading through this stuff, and it's just like kind of, I guess, what do you want to say, just destroy everything kind of philosophy, and it's just not good. There's nothing really good about this. Can't really say anything good about it at all. And the other thing too that's kind of troublesome is North Korea has been sort of ramping up what they've been doing. I just don't have anything saying good about this, guys. I apologize I don't, but I mean, you just gotta say what it is, and this has certainly been alarming the markets as well, of course. And I can read this a little bit. Several missiles hit downtown Kyiv as loud explosions were heard in the first attack on Ukraine's capital since late June. So it's been a while since they've had these sort of just attack on the capital. Residents fled bomb shelters as smoke rose over the city. Missiles also struck Lviv in the western Ukraine, Dnipro in the center of the country, and several other cities, including Zaporizhia and Mykolaiv in the south, which are close to the front lines. So there's also explosions in the Black Sea, port of Odessa, and air raid alerts went off in every part of Ukraine other than occupied Crimea. So it's sad to see, actually. Also, too, you guys probably know that OPEC has cut production, and so it leaves the U.S. in a funky spot. Initially, my understanding of sort of the reports that we read, it felt like that Biden, tried to negotiate for them to increase production or, at least stay stable. And they came out with a surprise cuts of production that were more than was originally projected. So it felt like that Biden and the team were misled, or who knows, I'm not sitting in the room with those kind of things. So in terms of gas prices, I'm sure it's going to go up. You also have winter is essentially coming, and as we reported earlier, like countries like France are essentially turning off all the lights at night. The Eiffel Tower goes dark earlier than normal. They're not entirely canceling Christmas, but they're cutting it shorter in terms of how long Christmas lights are on. So energy is going to be a real thing, and so if you are interested in stocks and that kind of stuff, I would say anything energy related, they're certainly going to come out. We're just never going to be a world where we're not going to have energy, right? We're always going to be using energy for different things. So I keep saying it over and over again. As long as the USA is dependent on Saudi oil or even Russian oil for that matter, just foreign oil, I just don't think it puts it in good spots. So you need to develop alternate energy technologies, energy independence, and use that technology and sell it to other countries around the world. And I always say there's nothing more American than that. Create American jobs, develop energy. So I'm saying this been stuff for years, and maybe finally someone will listen to me this time. But one thing I was thinking about too, just talking out loud, there may or may not be a new push towards nuclear energy. There is a possibility of that. So if you're in college now, something like that, get in majors like nuclear engineering. It's not a crazy thing to say. I'm sure there'll be opportunities I think battery technology, I think you guys know that stuff already, that kind of thing. But there's going to be need for that, right? And if you were looking to just get a job right now, not necessarily in school, anything alternative energy related, like solar panel installations, I'm sure are going to go through the roof the next few years. But to be fair, also too, we're going into recession, so it's hard to say. Maybe people will put that off because it's just too expensive. But there are going to be jobs in those fields for sure. In terms of the markets, where are we trading? So this is the Buffett indicator. This is saying we're 20% higher than the trend line, just so you have a general sense of where we are. And, you don't know exactly where the market's going to go, but you want to have a general sense of where we are, if we're trading expensive or not. So this would suggest that the way this is you're a little bit above fair value. If you want to get more raw numbers, you can look at the Shiller PE ratio. This is reading about 27. It's definitely coming down. I've told you guys all along, markets start to look more interesting in the mid-20s. This is a Shiller piece, right? There's different things you look at, but you need to have either stock prices come down or earnings of companies go up. And it's hard to see that earnings of companies go up, but you never know. We could get surprised. You don't know, but my guess would be, if I had to guess, it would be that earnings of companies are going to go down. It's hard to stay bullish, like I said, when you look at sort of what's going on in the world. But you never know. You never know what the surprises are going to be. But I lean more bearish right now. I see the 2-year Treasury. It's 4.3%. It keeps spiking. This as long as it stays above 4, it's hard to stay bullish on stocks. I saw this as well, which was a bit concerning, and I might do a longer video on just this situation, but it feels like to me the Bank of England is just propping up the UK economy. So I'd love to hear people from the UK, your thoughts on these things, how people are thinking about this. I just don't know how much longer this kind of essentially thing can last. It doesn't look good, and essentially what was going on is you had some over leveraging, and when interest rates are rising, and it affects pension funds adversely. So like I said, I'll make a video about this, and we'll see. And this sort of thing is not just unique to UK, because of the strength of the dollar and sort of inflation, rising interest rates around the world. Many world currencies are really, really suffering. People are retreating to the dollar. I'm in Korea, you guys know this, so we came here with a strengthening dollar, and if you're in dollar and you want to travel, go abroad, now's a good time. I keep saying that over and over again, but I'm telling you guys, it's like here you can see the Korean won compared to the dollar, it's like 18% the dollar's up, and the president of Korea is like, hey, we're going to try to defend the won, but they've been saying that in China, they've been saying it in Japan. And England's trying to defend their currency, but the dollar's just really strong right now. And it's not like the dollar's just going to crash one day. It'll come down. I mean, we could be at peak now, but like I said, it's not like the dollar's just going to crash. The dollar's it's just the currency. Like 40% of transactions are dollar, and energy and food is dollar usually when countries are trading amongst themselves. One thing is there's been this big news about the chip deal. There's so many things going on in the world right now, but essentially the USA is cracking down on American companies who want to sell chips to China, and it's also affected, Korean companies. So, like for example, Samsung really took a hit in their forecast as well. And I'm sure you guys heard about AMD, which we talked about last week, and I was telling you it looks like AMD looks weak. These are the descriptions coming out of China. It's actually quite interesting. When you read sort of either side's what the case they're making, and let's read the U.S. case, and then you'll hear the Chinese case, and it's quite different. So listen to this just listen to the language. So U.S. officials said that the new restrictions are necessary to stop China from becoming more of an economic and military menace. They are seeking to ensure the country's chip makers don't secure the capability to make advanced semiconductors. China, and this is a quote, has poured resources in developing supercomputing capabilities and seeks to become a world leader in artificial intelligence by 2030. And this is coming from Secretary of Commerce of Export Administration. It is using these capabilities to monitor, track, and surveil their own citizens and fuel its military modernization. So again, we'll repeat that. So the argument the USA is making is that China, you're using this technology that that we might be helping you do, so we're going to not help you anymore. And what you're doing is you're improving your capability to monitor, track, and surveil your own citizens and fuel your military modernization. Now, China hits back. It's kind of interesting to hear China's response, right? You want to hear the language of these things. Reaction in China was furious. The nationalist Global Times newspaper warned the, quote, savage attack on free trade would have dire consequences for the USA. And this is more quotes here. Only arrogant and ignorant people can truly believe that the U.S. can block the development of China's semiconductor or other technology industries by these illegitimate means. The U.S. hegemony in science and technology that harms others without benefiting itself may bring some short-term difficulties to China's semiconductor industry, but will in turn strengthen China's will and ability to stand on its own in science and technology. So, pretty tough words, calling the USA arrogant and ignorant, and essentially saying, USA, if you truly think you can stop us Chinese from developing technology, you got another thing coming. So that's sort of the war of words going on. But it's not just war of words; it's a war of money. You can see here, chip makers lose 8.6 billion after the USA announced that they're going to be trying to control exports, and so it's part of the thing situation. And I made a video, guys, yesterday about this because I try to continue and help you guys understand that as a long running theme. Elon Musk was actually praising China and saying, hey, Taiwan should join and it should be just like Hong Kong sort of thing. And basically what's going on is Elon's just kissing up to the communist, Chinese Communist Party. So this is why I tell you guys when all these people out there are saying, oh, Elon loves free speech, he's all about free speech, that's why he's buying Twitter. I mean, guys, come on, it's a bunch of BS. Like, he tried to get out of the Twitter deal and now he's forced to buy it higher, right? Then it's probably worth maybe double. It's going to end up costing a bunch of people money. And this idea that he supports free speech is just a bunch of nonsense, because if that were the case, he wouldn't be siding with the Chinese Communist Party. So I'm not making up just crazy stuff. The thing is that sales in China are important to Musk and the team. One of the things is they need to diversify essentially where they're selling cars, but China remains really important, and Elon Musk may be looking at maybe the Shanghai Gigabyte factory and say, you know what, we got to keep that thing running, because it's not just China's market. They ship cars from there to other places in Asia. So China is important to them. It's important to a lot of companies, but most CEOs don't necessarily say, hey, I fully support the Chinese Communist Party. It's just not something that and actively look to say things like that on Twitter. So that's just my thoughts on that. I just want to point that out, that and even Beijing's like, oh, we love Elon Musk, he's such a great guy. So just understand this is the real world. And moreover, I complain about Saudi Arabia all the time. It turns out at least Saudi Arabia, someone's making money. It's the Saudis. In fact, they're using all that excess money and they're trying to diversify, getting into essentially football, or soccer, Americans like to call it, but football, and you're talking about like 2.3 billion. They're basically going to advertise in a bunch of teams. Kind of interesting. And so this is going to be a thing that's going on. And me personally, as an American, I don't want our U.S. dollars just funding Saudis buying up football teams. And I keep saying over and over again, I'm going to just beat it like a dead horse. We got to develop alternative energy. So in that regard, hey, I'm all for American companies like a Tesla, for example, to develop this technology. But I think we need to have just more than a Tesla strategy, and get lots of companies on board, and hopefully incentives to help boost our technology. And I think it's not crazy stuff to say, hey, invest in science and technology, and use that as a bedstone of the economy, because I just don't want to get beat by other countries and supporting them, and essentially price gouging us for oil. It's been like this for years, and maybe this will be the breaking point this year. Let's hope so. But overall, it is funny. I was thinking about this, how I lived through the dot-com bubble, and then immediately after was essentially 9/11. And it's interesting because here we went through essentially kind of like a COVID crash, and then we had this crazy run up with the stimulus check printing money, et cetera. And now we have a war, and it's kind of like a similar timeline, right? So who knows if every 20 years this is the sort of thing that happens. I'd love to hear you guys' thoughts on that. But I was just thinking about how I've seen it before, and we're seeing it again. And I hope the war in Ukraine will come to an end soon, but it just doesn't seem like that. It feels like, and I think that's why the markets are a little bit sour. It feels like it's not slowing down, actually speeding up, or escalating, as what way to call it. But we'll see. It could just be the last chance of Putin to try, and maybe this is the end. I don't know. I'd love to hear you guys' thoughts on that kind of thing. But I think this winter will be a real testing period for the war to see, if it basically starts snowing, gets cold, and supply lines are cut, and that could be the end, or it could continue to drag on. I don't know, but I'm just saying the winter is a chance for a catalyst for something to change. If I had to bet, though, I'll say energy prices will most likely spike, and we'll see. It's hard to predict these kind of things, guys. I'm sure you guys know. So anyway, always appreciate you joining us every time, and this has been your daily Uncut News.